Hello, everyone. I'm Andrea. I will be moderating. I will not do as good of a job as the previous moderators, but and no, the Yankees are not sponsoring the talk. So first of all, what everyone is going to ask is going to think about this. What propelled you guys? And if you want to talk a little bit about your background before, maybe just short sentences about what you've done in the past and how you got to this point in your life as a funder, as an investor.
Yeah, cool.
Yeah, you can start, Vadim.
Hi, everyone. Yeah, my name is Vadim. So I've been running startups, since I've been a student, right, like for more than 14, 15 years so far. And, but I always wanted to spend maybe like up to 20% of my time to do some occasional small angel investments, to mentor startups, because I was also excited to see what's out there, right? And maybe like to look at my company from different perspectives and help other founders with my experience. And that's how so I'm originally from Ukraine, so I built one of the first startup accelerators in Ukraine back in 2012. So it was before I moved to the US. And then, so I'm currently actually doing both. I'm running my own a company that is doing real AI, and we've been doing AI for 7 years when it was not as sexy and as popular as it is today. And at the same time, I'm a partner at Geek Ventures, and we, together with my friend Ihar, we raised $23 million to support immigrant founders focused on the US market. And the mission is to build the most founder-friendly VC, like the VC that I lack, the VC that I didn't have when I was starting my own company 12 or 14 years ago.
And we'll talk about founders-friendly funding.
Of course, that's very
we'll have a
important.
conversation about that.
Yeah.
And you, Masha?
I run Day One Ventures that I started almost 6 years ago. It's a fund that invests in companies and spearheads their communications. And in the past, I started 2 companies in marketing and communication space, and also had a privilege and luck working with more than 30 unicorn founders in their early stages, from inception until they went public or got acquired. And was just this experience helped me to understand how great founders look like, and I wanted to do it in the most aligned way, and on the same time found a niche in venture ecosystems that was quite unique and that no one has been covering. We see that provides value add with PR and communications, which is very essential as you scale the company, and kind of a combination, finding great community, having opportunity to work with the best founders, building 2 businesses before, helped me to create Day One Ventures.
Thank you. And Federico?
Grazie. I'm Federico. I run Enea Capital. I'm a builder. I built a couple of companies. I built a currency when I was in elementary school, but I always felt wrong in Italy doing so. So unfortunately, I'm very grateful for the country, though. So I decided to move to the US, and when I landed in the US, I was fascinated about, again, curiosity and courage. I was fascinated about video. Everybody used to use Zoom already in 2014. In Italy, we learned with COVID what it was. So the curiosity made me ask what I can do with Zoom. How does the ecosystem change with Zoom? And I was particularly fascinated about the data component. How can I leverage the data and for what that are coming from Zoom? So I started a company, was capturing data from Zoom to help companies with HR. So hiring talent and actually managing talent. And I ended up providing HR for 21 unicorns since they were Series A. So I saw them becoming unicorns, and I realized that that company was an incredible funnel to meet all the fastest growing company in the Bay. And they also had private data that nobody else had, not even Sequoia and Andreessen and all the big names. So I started investing, and the common feedback that I received from all these very, very successful founders was that when you build your first company, you think that raising from the big names is your biggest dream. It's like going to Harvard. Once you have the big name in the round, you made it. But then you realize that at the big names, you don't speak with the founders of the fund. You don't speak with the partner, if not a couple of times during due diligence. You speak with analysts that don't have the courage and the curiosity that we are speaking about here, and they don't understand the ecosystem, the ideal customer persona, things like that. So they all told me 21 in a row, the best investors are other founders. And so that's why we built our fund.
That's great. And you know, Vadim touched upon a very interesting point, because we were chatting about this while we were in the other room, and it's, what does it mean to be a founder that is an investor that is founder friendly? So what do you consider a founder friendly investor?
Yeah, that's a great topic. I think it's a very trendy term now, and every second VC thinks that that they are founder friendly. However, very often it doesn't make any sense, because for me, founder friendly, it's not when you as a VC help your founders when things are going well. It's when you're helping your founders when everything is going bad, and with startups it happens all the time. So, and very few VCs can really help a founder when something is going not as expected, because that's not how their mindset is set up, and they just always try to focus on the quick winners without actually doing a more job and the hardest part of the job to help the others. And one of the reasons is, I think, because usually VCs they just never build their own startups. They don't understand all the tears, sweat, blood, and all that is involved when you build your own company. And that's why they don't understand that you always go through these ups and downs. So I think that's why people who built the companies before they started to invest, I think they have more chances to build really founder-friendly VC.
And do you think you have to be, we will define later what a successful investment is, what a successful build is. But do you think you have to be a successful founder, or is it enough to be a founder before an investor, even if your company didn't make it, but you learned the lessons in hard way?
Yeah, I mean, it's an interesting question, what does success mean, but I think definitely at least scaling the company to Series A and beyond through at least 3-4 funding rounds, and like maybe to some kind of exit, right? But I think it's not very important what kind of exit or what the size of the exit, but like that you've seen this all, right? All the life cycle, yeah.
And you all actually had exits. So what do you think about this idea of founder-friendly investors? How do you see that? Do you see yourself as being an investor that is very hands-on? So for example, on our side, we run a venture studio. So we are building businesses and investing in businesses at the same time. So are you very hands-on type of investor? Do you kind of guide your portfolio companies, or you tend to stay a little bit farther away?
I think when it comes to like founder-friendly, I'm more like the word useful and something practical. I think in many cases you can help founders quite a bit. I think I started in VC in 2010, and at the time it was like my first job after building my company, and I was just like having so many ideas and so many introductions and so much volume of work. And from that time, it's been more than 13 years at this point since I first worked in VC. I think I just understood that the best help when you could listen to the founders and not give them like solutions or decisions, because if you give them, it's not necessarily authentic for their specific company, and it's very often you come up with cases without understanding full context, and in many cases the best is just like being there, present, listening, and maybe point them out on good decisions that they just already have in their head. In terms of being friendly or useful, I do believe you cannot help founders with all kinds of things, even if you build previous company. For example, you build previous company, maybe your strengths in technology, but you didn't figure out marketing. I don't believe you can help with everything. I also don't believe that funds will do a good job are helping generalist funds that just like help you with everything could do a good job. I do believe that they can actually help if they have experience, platform, time, and internal processes. I think about what we do is our own product. So we have our process to the way how we provide value. We have a separate team. We have separate network that's just dedicated to providing this value. And while all funds helping founders with like strategy, fundraising, introductions, I think we're at the point when just doing this stuff is not enough. And I much more believe in specialized funds run by operators that provide particular value in particular niche which they understand best on the market. I like to think about PR and communications value that we provide for founders as not just that they get it for free, but I do want them to know that there is no vendor, there is like no one they can go on the market that they can buy these services from, right?
Yeah.
It should be better than anything they would get even if they paid for it.
Yeah.
Then it makes sense. It's like something unique and something like significantly and clearly better, and I think as a side effect it drives the best founders. For example, in day one we backed some founders like Sam Altman, we backed with his new company, we backed Netflix co-founder, we backed probably another like over maybe like 15 unicorn founders, and the question is like, why would they take our money on seed stage? Because they have enough assets and they just need this help, and not just help but also work. And I do believe that's an advantage, and that's something that can justify selling equity for a very cheap price on very early stage where we operate.
That's great. And what do you think, Federico?
I think that you need to believe in the founder, so for sure you don't want to do his job, but at the same time you need to understand what is important at the company and at the stage where the company is, right? So for example, on the 0 to 1, what is important is to hack product and go to market. So you can help the founder with engineers, other founders that hack growth in the same industry, sold to the same ideal customer persona, one that the part of the journey. And the 1 to 10 maybe is more important to understand how do you build economic machines that are reliable, scalable, replicable. So it's very important to understand the stage of the founder. And also, I think that the beauty of fund managers that have been founders before is that founders hang out with other founders. So it's not only about your personal experience, what you did in your company before starting your fund, but also the fact that you probably know decades of other founders. So I can actually put you in contact with the engineers that are expert in that field, with the founders that is expert in that field. There is a community around you, right? So I think that's crucial for sure. And again, you need to believe in the founder and invest in founders that would like to walk through walls to make things done. But that's the support of the network that you can give to them.
That's great. One of the things that I wanted to also touch upon is diversity. You know, Masha just said before that she started this in 2010. You know, she started investing in the VC space. So, what do you think is important when it comes to having a diverse type of portfolio? What type of sectors, geographies, and do you want to call yourself a diverse investor just for the sake of it, or just also because you want to distribute the opportunities in a bit wider way? Because from what I see outside, sometimes it seems like deal flow is very concentrated and it's very much for the Bay Area boys, and then everyone else in the outside in the world is it's a bit cut out, and having allocations in those places is difficult. So, how was it for you to, as a woman investor, entering a space where it's predominantly white men? How did that feel? And then also, how much is important diversity in your general thesis of investments on all the three of you? For the three of you.
I think in the beginning it just didn't really feel any struggle by being female investor, and I think even like defining female or male, like
exactly.
I rarely get the introduction, hey, like introducing you to this male founder of this company. But if you look at the industry, it's definitely it's not very diverse, and it struggles with it. And if we look at like our latest fund, we actually have 62% of capital that went into founders which are female or POC. It's and we still have 36% IRR despite of like quite tough market and the 8 unicorns that we backed earlier. I think it's never been like by design. It just came as a natural continuation of our search for the best talent, and probably being like less biased. I think 2 things that really help. One is like I have exceptionally diverse team. They're like most of them Americans, but I think almost all of them second or first generation immigrants from absolutely different places, and we all like very different. And second thing is just, I do think in terms of diversity in the sectors, it doesn't have to be, I mean, there are like different strategies, right? We invest in like 6 main sectors and some funds focused on one sector. I think there is a lot of leverage and opportunity being focused on one sector, but if you think about your founder base, the only way to build really resilient and special deal flow is actually being, having diverse set of the founders. And one of the things I noticed over the last like 12, 18 months, most of the companies that becomes break-even is actually companies ran by female or POC founders. And I think in some ways, it's kind of like a side effect of them understanding, well, it's probably like, I have less chances that founders with more traditional backgrounds, so they just do their best to make sure that their companies succeed. And I think in crisis and downtime, diverse portfolio is more resilient because people with different backgrounds and unprivileged backgrounds doing better job maintaining company in crisis because they take it as a kind of like last chance.
Yeah, I agree. Your take?
Yeah. So as for us, our thesis is built around immigrant founders. For us, immigrant founders, it means that people who are not born in the US but focused on that market, and we act as a bridge for them to kind of help them to get access to network of investors much faster than if they would just relocate and build it using conventional methods. And this thesis is built around, like first of all, my personal and my friends' personal kind of background, because we are both immigrants, and at the same time, it's also related to the fact that I don't remember the statistics, but like the major part of unicorns was built, like in the US, was built by immigrants or by first or second generation of immigrants. So it's not a secret, we tend to observe that immigrant founders, they're usually more coachable. And for us, coachability is probably one of the main things because we invest very, very early. It's like pre-seed or early seed. And we look at founders, right? Like, of course, we look at total addressable market, but first of all, it's founders, and coachability, it's the main thing. And for me, it's like a balance between listening to investor and doing everything that he says, which is totally wrong, or being really kind of playing defense all the time and not listening at all. So there is, and when there is a balance, you understand that you can be a partner for this founder. And with immigrants, we just tend to see more.
It's very interesting that you three all kind of moved to the Bay Area. Like that's
to New York.
To New York. Okay, but you had to go to the States to. Okay. That's interesting. But what's your point?
I think that it's very important to understand what diversity means, right? It happened to me in the past that, for example, I was invited to join a board, but then I was a man, and there were no spots for men anymore, and a person that comes from a very wealthy family, top university, paid by the family, joined the board. I paid university on my own. I started my company when my family started a company in the field where I did. And things like that. So is that diversity? Is that not diversity? I don't know. I think that you need to optimize for talent. Yeah. And probably a priori, you need to build an ecosystem that allows people to arrive with the same rights to choose what they want to do. Yeah. But you need to optimize for talent. But I also want to say that people that went through difficulties often have the best talent. Yeah. So we see the same with immigrants. If you went through walls to get things done, hello? Okay. If you went to the US, you tried to get a visa, you went against your school system to get to the US, you went against your parents, everybody in your country to move, probably you have the same spirit to do what it takes to take a company forward. So for sure, people with the more difficult background, I think that they have the best spirit of an entrepreneur. So it's important to see that and support that. And that's actually another area where I think that fund managers that have been founders are better, because most of the founders are immigrant. They understand this, they have this background, while I saw that many historical, very famous fund managers that have just a finance background, they tend to look for keywords, and immigrants would not know those keywords. I saw many funds invest in companies just because they knew exactly the keywords and the metrics related to any keywords, and then they were terrible companies. And other fund managers that have a founder experience that understand really the context and the concept and not the keywords, and avoided many FTX of the world.
Yeah. That's a very good point.
And there are memes about this and jokes about this.
I hate FTX because I was really bad burned. But let's not talk about that. But in general, if you could summarize a superpower that you guys have, like what is your top quality, and are you looking for that as a person? Are you looking for that specific quality? Are you trying to find it mirrored in the founders that you're working with? Do you like to see other work with people that have similar attitudes? And yeah, I'm curious about that, because that's something that I always try to look for whenever we're working with people. Not exactly the same quality, but something that's complementary on our side. So like, what do you guys think? Let's start with Masha.
As we started company, we called it Day One Ventures, and it was called after Day One company that Jeff Bezos wrote about more than 20 years ago. I met Jeff, he inspired me. I was like tapping into culture of a company, massive company he created, and customer obsession was one of these criteria, and this is something that we've been historically learning and looking at. And you can really understand it by the way how founders speaks about what they do. And there are like all kinds of great motivation to build a company, but we believe that customer obsession at the core of the country is really important. And the second thing is like more recent. One of the best founders I worked with have the following quality. They able to intuitively find the most important thing at any point of time that they have to focus on. And it's very important. It's not 2 important things. It's not 10 important things. It's not 20. It's just one. And then they focus their like full attention on this one thing and just keep doing it until it's done, right? And then they switch the focus. I learned a lot from this, and I learned a lot from observing founders that operate like that. And I think it's extremely important if you're shooting to build like really massive company.
What's your opinion?
I think, yeah, if I would pick one thing, it's probably speed and speed of experimentation, right? Because lots of founders, they talk, and like the week passes by, 2 weeks, 3 weeks, 4 weeks, and they talk, and you don't see any, like what's happening. Like, they don't ship the features, they don't ship the updates, they don't talk to customers, because because it starts from self-discipline. Well, 90% of founders, they don't send updates to investors. What are we talking about? I mean, they don't do their homework. They don't do some very simple things, right? So if you talk about speed of experimentation, it sounds very, very obvious. But yes, not like very few founders really can maintain like and run experiments every week. So basically, or every 2 weeks, so they send like ENPS survey. They ask their customers what they think. Then they implement, they change something in the product, then they do it again, and it happens consistently. It's very rare.
And so how do you balance with perfectionism though? Like people say, it has to be perfect. I want to see it perfect.
When you run early stage startup, I mean, perfectionism is an enemy. It will kill startup. I mean, totally not.
I think that I like to be a generalist. And I think that's something that in Silicon Valley you cannot see a lot. People are very specific, which is actually also the power of Silicon Valley. But when I invest, I always try to help to give a general picture, understanding the supply chain behind any context, right? So again, not keywords, but what does it mean? What are the obstacles? What is the infrastructure layers that allows this technology to happen? What it blocks you? How does the entire ecosystem change? What are the best people to solve all these problems? Where sometimes if you're too specific, you're the best one in the world to solve that problem, but sometimes you don't see what's happening on the side. Yes, so that's what I try to bring to the table. And yeah, I think that is one of the value. And then execution. I completely agree. A lot of people, they just try to find perfection, but they never act. But I think that it's important to get things done and see how the market reacts and get feedback from the market with data and without philosophy.
generalist is a very good word actually that, kind of, when you invest in people, do you look for specialized, they're very, very good at one thing, or do you prefer people that can kind of pivot? Because in the startup environment, when things, I don't want to say, I'm trying to rephrase this in a proper way. When things go bad, you have to be able to pivot. How do you see that type of ability from founder side? Is it important to you that maybe your investment was on thesis A and then you start going towards thesis Z? Are you still backing the founder, or are you going to be there for them? What's your approach towards pivoting and changing your business plan?
That's a good question. So, because we invest very early, we place our bets on founders and on the market in general. But even if they decide to change the market completely, we still believe that founders will figure it out. So many times we invested in founders that initially were building something on a very competitive market. Like something that like what they currently were building we didn't like actually, but we liked the founders so much that we just internally decided that okay, let's give them a shot, because they will eventually understand that probably they are gonna hit the walls, they will pivot, they will build something else. And a few times, I mean, because we only launched the fund less than 2 years ago, so not enough time already passed, but we already seen that this thesis started to work, because if you're a very coachable, fast-learning, agile founder, you will always understand when, and you'll have the right intuition, the right gut, the right, maybe also backed by experience, obviously, to understand when you need to pivot and how.
Please.
I think very often companies pivot, and however, I do like combination. I think it's been many times I've backed a company for founders, but I would say the biggest excitement and just like the biggest stories we had, it was like a combination of exceptional founder and really, really big market, or completely contrarian bet, completely new market, something that no one does and something that not everyone agree with. I think the best experiences I had when it was combination of exceptional founder and some new markets that like founders clearly go for. I think we had a few pivots, and of course we'll be supporting the people, and I think it's also a side effect and benefit of being able to be early investor, because it's completely different when you come on Series A, B, C, and you had to measure a lot the market, and if you're early investor, you probably can still have outsized returns, even if it's something else, even a market slightly smaller, or there are some changes in the environment. But I would still say, like, I think founders should probably like not go raise money until they're like fully sold on the idea. And in this case, chances that they're going to pivot are fairly small.
Mm-hmm. Absolutely.
I think that I completely agree with their combination is very important. We like number ones in their domain. We work with the number one employee at Starlink, the people that landed at Falcon 9 at SpaceX. Most of the times, the first 5 ideas that you hear from them when they're still at SpaceX or Palo Alto Networks or NVIDIA or these top companies that generate talent are terrible from a commercial perspective. So that's why it's important to have a combination of resources and skills and knowledge. And that's why the community I was speaking about before, it's important. That's why if you get money from a fund manager that is a founder and probably knows a lot of other founders, you can find complementarity, the complementarity we were talking about before.
Okay. Do we have questions from the audience? I think, thank you so much for responding to my boring questions. Please.
Like maybe good concept, good company, but a nightmare of a founder. Is it worth just persevering, figuring out, maybe you just close your eyes and you let him do his things, or you figure out how to set up guardrails for her? Like, how do you think about that now that you have experience and you've encountered a lot of this kind of personalities?
So for me, if like a really uncoachable founder, first of all, or like really bad personality with bad judgment is like red flag immediately. We won't even proceed, because it's better to have a coachable founder with the right judgment, right, with a terrible idea, than vice versa. Because all my mistakes that I made with my early angel investments were when ideas were great, they're still great, but the people were just totally not capable of, and also the founders just, the team broke apart, something changed, some founders started to, some founders, like there was one story, when founders just decided to marry and not run a business, like all the kind of ugly things that happen, right?
Marriage is not ugly.
No, I mean, in a startup, I mean, right? So, and this is gonna, and yeah, and that's why the ideas were great, and the markets were great, but the founders were not ready because of many reasons, yeah.
I think that the idea don't matters. Founders are everything. I see a lot of founders on ideas that look ridiculous if you have somebody else telling you, and they go public, and founders with revolutionizing ideas that they get stuck very early, they don't do anything, right? So I think that founders are really the core along the entire story and journey. They are very good. Founders are important for the company. They can be good investors, and they also like to leave this thought about how in venture capital you cannot play a game of AUMs, right? So we saw a lot of important funds raise billions of dollars and then failing and having terrible returns. In my opinion, the solution to avoid that and to win venture capital is to own this founders community, and then you can also build multiple products around them. So you back them when they're still at school, still at their companies. Then you invest in their company, first, second, third company. They invest on your behalf. They become your scouts of new companies. And then you become a portfolio manager for them, an asset manager for them, right? So I really believe that the founder in the VC ecosystem should be the core from A to Z.
But you know, one thing before maybe Masha responds, I would also add, today we talked a lot about founders, but it's also important the team that you have around the founder, right? So there's a massive difference. You can have a brilliant founder, but if the team around is not supporting and it's not able to execute as fast or to just iterate and follow the vision, it's going to be a problem. So you can have brilliant founders, but if you...
A founder, if he doesn't know how to attract brilliant people, is not brilliant.
Yeah, team is the reflection of the founder. It's the function of the founder, I mean, basically.
True.
So if the team is bad and the founder is much more professional, then he is not the right guy, because he cannot hire people who are better than him in certain markets, certain areas. Yeah.
I think if ideas good, founders are not great, we look for different team. And sometimes like we would invest in later stage if we really like the theme, but founder is not great. And I think it could be a signal to look for other companies competing with this one. I think every time we back a company, I try to understand if it's someone I want to do business for the next 10, 20 years.
Yes.
And if answer is no, it's great, we just move on to another opportunity. And I think the further you work on VCs, the more it's about like saying no and focusing on very small amount of opportunities that would be totally exceptional. That's a difference from any other industries.
I agree. Other questions?
Yeah, I've got a question here. I think initially probably for Federico, and then for the wider panel. I'm a founder and now a funder, and we invest a lot in the US, but also all across Europe and elsewhere, sometimes India and so on. You guys are all Europeans of one type or another. I think all in the US now. No? I mean, the first question for Federico, this is Tech Italia. You know, how do you ever invest in Italy? Do you think there's the beginnings of an ecosystem here? How do we get that going? And then for the wider panel, what's your view on the European tech scene now? Are you guys investing in Europe? A lot of developers here. There's been a lot of unicorns out of UK, Sweden, a few from Germany, and so on.
We got one in Italy too.
We got one in Italy, yeah. We got in games. We got 505 Games, which is almost there. There's some great success, right?
Yeah.
How do you think about all that?
It's a tough question. With my co-founder of the fund, that is another Italian guy in San Francisco, way more important than me. We always say that Italy invests in Silicon Valley less than Ghana, and we have less unicorn than Nigeria, with total respect for both countries, but in terms of GDP production,
by the way,
there is a
cheese, not
big misproportion for a number of reasons. I think the critical mass is for sure a topic. All the successful companies that did well in Italy, even in the past, without speaking about tech company, if you speak about fashion, manufacturing, design, they have a global market. So I think that if I see companies in Italy that can approach a global market, totally. We have a couple of Italian companies in the portfolio. And again, I like to see those people that wants to walk through walls. And sometimes if you find people starting things in a country where it's not for granted, maybe that is a good signal of personality. However, the ecosystem is also important too. Generally speaking, unfortunately, people in California, if they go all the way down to California, even if they come from this less lucky country in tech, it means they really want to make it happen. You want to ask yourself, if you do fashion, you need to be in Milan or in Paris. You don't go to Potenza or Sicily, unfortunately.
Sicily is great.
Yeah, Sicily is incredible. Not for fashion, unfortunately. So,
Go, please.
why? Or you don't even go to, I don't know, United States for that reason. Why you're starting a tech company? You're not going the #1 place to start a tech company, and why you starting a fashion company? You're not going to the #1 place of starting a fashion company. Probably it's not your priority. However, I hope that the ecosystem in Italy change, and I'm here for that because I like to contribute to that. But it's a tough question.
I think the question is like, does like country or population really wants it and needs it, and tech is like very popular, but it doesn't mean like everyone should be doing tech everywhere. And there are like lots of businesses outside of tech that are doing something useful or beautiful. I think one thing is just like missing in some European places which are great to live is culture of building the company. It has to do with like work ethics and intensity and focus and dedicating to the life. And I think the easiest way to do it is to having this culture be brought. And I think when lots of Silicon Valley companies scaling outside of US, they look for new places to open second office, and it's an amazing place. And I think what you can offer is most of all is like regulation and maybe like some great economic terms and just ease of the process when you need to open office. I think the way to inject more of this culture would be bringing a few very quickly scaling mid-sized companies, making them open second or third office in your country in one of the cities, and ideally like having them in one place so they can produce some talent who would stay here and be producing new companies. I think at this point it's about it.
Like from my standpoint, we invest in European founders mostly. Actually, the vast majority of our founders are European who are focused on the US market, but still have teams, especially development teams, entirely in Europe. 9 companies are actually were founded by Ukrainian founders out of 37 that we have now. And in terms of your question about Europe, as a founder who also kind of raised money in Europe, I know that one of the biggest problem in Europe is that it's very fragmented, and French VCs want to invest in you if you have presence in France, with the same related to Germany, the same to Scandinavia, the same to, I mean, I never met an Italian VC, so not probably that's the first one, right? But probably the same thing, right? So it severely limits the potential to invest, because when I was offered to open an office in France to receive money from a French VC, I would think like, why do I need this, right? And why do I need to employ people in France, etc., if I can employ them where I need them? Right? So this is the main obstacle, I think. As soon as you, and I understand why, because a lot of government money was poured into VCs. I understand all the restrictions, right, all the strings attached. But I think as soon as this will be somehow solved, Europe, in terms of like VC funding and number of successes, will grow tremendously.
Yeah. Unpopular opinion, I'll also chip in this. Like, there's also a reality in which we're kind of destroying geographical borders. So, like, talking about an Italian company or European company makes less sense, because now you're building on open source software, you have Web3, that it's completely eradicating all sorts of limits in that sense. So just knowing that you're building global from day one, and you can have your product and use your product everywhere in the world, and it's not limited to just that country. I think funding is changing. Ways that people are getting money is changing, and geographical borders are making less and less sense. I think we ran out of time. Yes, very much so. Thank you so much. Thank you to our panelists.
Thank you.
Guys.